Hey folks, welcome back to the channel. This is Jason. Finally got my new computer all set up, ready to do some videos again. Now, I haven't done an individual company video in a while, and I thought it was about time. So I'm doing this video in response to someone in my Patreon group regarding this company, and I'm going to be talking about Figma Group. They're about to have their initial public offering here in the next couple of weeks, and it's probably going to be kind of a big deal. We've already seen a couple of really successful IPOs this year like CRCL, and this is likely to be another one. Of course, that's not guaranteed. So let me start off with the bottom line here. This is a real company with real revenues. Their tools are widely used. They have a growing suite of products. They have recurring revenue, and they have some pretty impressive revenue growth. Their investor deck and SEC filings have revealed some pretty impressive numbers about current revenues, market penetration, and especially the stickiness of their client relationships, which, of course, with a software as a service company, this is pretty important. This is a pretty solid company, and I think it's a pretty good AI play as well. They've already penetrated pretty far into the tech world, and to be honest, I'm surprised that they didn't go public earlier. I think they were probably just waiting for market conditions to be in their favor. So what does the Figma Group do? Actually, they do a lot, but I'm going to lay it out pretty simply here. Actually, let's call this simplistic. The simplest way to describe them is that they're a digital product development platform. As always, though, the simplest explanation barely scratches the surface. This is a new collaborative development platform developed really by a new generation of software writers who cut their teeth in a tech environment that was just radically different than the generations that preceded them. There's kind of a big shift in the culture of product design that's catching a lot of people by surprise. Dylan Field and Evan Wallace, the co-founders of Figma, were part of a new generation of founders that originally found community in collaborative multiplayer virtual worlds in the form of video games. Now, previous generations of software designers like to talk a lot about collaboration, but the reality is that designers really worked by themselves in siloed environments and fragmented tech landscapes and just sort of reported to, a boss while being radically preoccupied with which file version was being overwritten by their coworkers on some server. So once again, guys, this is a highly simplistic version of what Figma does, but they took the highly visual aspects of user interface design and software development and allowed product designers to collaborate in real time, share ideas, and have seamless version control from anywhere in the world through a browser. They sort of mimicked the functionality of Google Docs that their generation was already familiar with and just applied it to digital product development. I did say that this was a simplistic explanation, but this explanation is really not the point of this video. The cold, hard numbers are really the point of this video, and those numbers look pretty good. The best evidence that a company has great products is the number of folks that are using them. The best suggestion that this company will continue to do well is their revenue growth. The best suggestion that they will continue their revenue growth is the stickiness of their relationships. And the best evidence that their growth will eventually be reflected in earnings, which in turn will push up their stock price, is of course profit margins. For that last point, we have some very good indications, but we won't really know until they post a few quarterly reports after going public. So Figma's products are already being widely used, and you may not be aware of it. They have about 13 million monthly active users. They're all paying subscriptions. Well, of course, they have free tiers and they have paid tiers, but they have 13 million active users. 95% of Fortune 500 companies use their products. 78% of Forbes 2000 companies use their products. 76% of customers are using 2 or more Figma products. In 2024, they had $749 million in revenues, which represented a 46% year-over-year increase. A very important metric for software as a service companies is the net dollar retention rate. It's a measure of how well a business retains revenue from its existing customers. Below 100%, your products are losing revenue from its existing customer base. Over 100% means that your customer base is growing their business with your company. So a net dollar retention rate over 120% would be considered a really good rate for a software as a service company. Figma's rate is 132%. Their existing customers seem to be happy with their products, and it's a good indication that they're meeting client needs. Now, Figma reported in their S1 filing with the SEC that they had an operating margin of 117% for the 3-month period ending in March 2025 and a non-GAAP margin of 17%. If you don't know what that means, non-GAAP usually means they're just excluding irregular or non-cash expenses such as those related to acquisitions, going public, restructuring, or one-time balance sheet adjustments, or even sometime like stock-based compensation. So as with almost every company that has gone public in the last 20 years or so, it's likely that Figma will not have positive GAAP margins that account for all expenses for several quarters after IPO, maybe even a year or two. So what do I think is going to happen with the stock? All right, let's remember, I'm just crystal balling here. I'm just taking a wild guess. The documents that I've read so far are putting the IPO price at somewhere between $25 and $28 a share. The company's seeking a $13 billion valuation, and they're looking to raise about $1 billion with the IPO. My problem is most of this money is actually going into shareholder pockets. They're going to reward themselves, of course, for years of hard work and success. Shareholders are looking to sell about 24.46 million shares, and the company is only looking to sell about 12.47 million shares. So Figma is likely to only raise about $330 million out of that $1 billion IPO, which tells me one thing. I don't believe that the IPO is going to stay in the price range estimates today. Sometime in the next few weeks, underwriters are going to raise that price. It also means that the public is probably not going to get the opportunity to buy those shares anywhere near the stated price range today of $25 to $28 a share. By the time you're able to purchase those shares, I think that the price will be $70 plus per share. The company is not worth that currently, and it may be worth that relatively quickly, meaning the next 2 years or so, but like the CRCL IPO, I don't think there's going to be any current justification for the current price of the stock. I also think that if the macro environment continues to hold on for like just another 9 months or so, we're likely to see a secondary offering from both CRCL and from Figma. The company is going to do that to raise even more money. And yes, that means dilution. That's not always a bad thing if the money is put towards expansion. The bottom line here is that I think that this company has the potential for a pretty explosive IPO, and it might blow way past any reasonable valuation. As always, I recommend a little caution here. It's likely going to be a very fun ride, but let's remember that reality always ruins the party at some point, and the company will return to fair market valuation. If you invest in the stock, you should have an exit point in mind before you purchase, and just be happy with the money you made, or avoid this stock entirely if you don't like roller coasters. As always, do your own research. Make up your own mind. This is not a recommendation to buy, sell, or hold any security. Check out my Patreon when you have the chance. Thank you very much and have a nice day.